Wang. She's head of China economic research at UBS. Wang, thanks very much indeed for joining us. First of all, well, what's your first take on this?
Well, the GDP number at 9.5% is as we expected. So the slowdown in the economy is very moderate, as we have been saying. I think the market fear of a hard landing in China this year is exaggerated. And the State Council's policy stance, I think, will remain unchanged. We have also seen from the June number, it seems that retail sales is rebounding back a little bit as well.
Yeah, and, well, people keep on going on about hard landings, soft landings. Does there need to be a landing at all, really? If we continue a growth at 9.5%, that seems like pretty robust growth to me.
That's right. Indeed, I think the danger for China is probably not landing rather than hard landing. But at this moment, I think we are still forecasting growth continue to slow down towards the remainder of the year because of also external demand weakness. We see exports slowing in the rest of the year. So our forecast for the year is still 9.3%. That means in the second half, growth is going to be a bit weaker.
Right, so we could see a bit of a soft patch. It could be just business as usual then after that. But in terms of the fight against inflation, this should give the central bank a bit more resolve, given the fact that they have this trade-off between growth and indeed price rises.
That's right. I think that's why the government continue to say that keeping price or maintain price stability or control inflation is still the top priority. But I think the government is still very worried about what's happening outside of China with respect to European debt crisis and also the soft data in the U.S. And of course, I think even from today's data, industrial production of larger companies are doing very well, but small companies are probably not. And also there's some softness in the construction data. That's why the GDP is not as strong as the IP number would have suggested. I think that's why we think the government will maintain its current stance on monetary and credit policy, not tighten on credit further, even though they may raise interest rate again if July CPI is still at around 6.4.
Now, you write in your report here that the economy is approaching an inflection point. What do you mean by that exactly?
I think in terms of the Q-on-Q growth in the second quarter, we have seen some weakness. We saw, for example, PMI weaker, and also in industrial production, we saw May number, April number being having decelerated. But the overall final demand is still pretty solid. We think the inventory adjustment or destocking is coming to an end. At the same time, market fear of inflation probably is reaching the peak. So we think this is probably the inflection point in terms growth is actually stabilizing. People's worry that growth will continue to go down was probably exaggerated, and people's worry that policy will continue to tighten further have also, I think, reached its peak. So this is an inflection point in our view.
Wang, if we do see a substantial or a deep slowdown for the Chinese economy, when will it be in your book?
Well, I think for 2011, I think growth is going to be pretty stable. When I say the second half growth is going to be lower, that's year on year. In terms of sequential momentum, we think basically it's going to be pretty stable at around 9% from now. So if we do see a hard landing, I would worry probably a couple of years from now, because next year we have a political transition, local governments change, and that usually coincide with a period of rapid investment in China. So I'd be worried after that we could see a more serious slowdown in the form of a hard landing.
Wang, thank you very much indeed.